All right, guys, what is going on? What is Gucci gang? I thought I had started the stream a little bit earlier. I thought you guys were going to be able to hear that alert going off. And it turns out I had not started it yet. So, oh well. Had I started it on time when I wanted to, you would have heard 24,876 and a half for NQ, which is London's low. So that had got wrecked right at 12 o'clock, right inside the macro that doesn't exist. Right? Right inside these time windows that are subjective and random. So that was interesting. So obviously, as of right now, I think the markets look heavy. This doesn't really seem like a reversal to me. And there are many reasons for that. Number one, if we go to regular trading hours for ES, we are very close to the low end of this gap. And bullish markets, that's not what you want to see in a bullish market, right? Dow, I really don't even have a lot of markups over here, but same thing. It's actually beyond its low end here, so this may not be all that strong. And NQ, here we are. So we're beyond halfway. We're probably near like 25%, like the lower half, if you will. So again, as much as I would like to see higher pricing, this looks heavy. You know what I mean? It just looks heavy. So I do not want to argue that. You know what I mean? You know what I mean, chat? What is today? Wednesday, right? Oh, yeah, Wall Street Wednesday. Okay. So I guess we'll go over a few things and talk about some of the opportunities that were presented. And I know some of you guys had asked some questions like, oh, well, if, you know, if the higher time frame is bullish, you know, why are we looking for shorts and what have you? And one of the answers to that was usually is going to be RTH, okay? Regular trading hours. Drop a 1 in the chat if you guys can see and if you guys can hear. Let me just do a sound check real quick before we get too far into it. What's good, Naruto, Felix, Eric, Jorks, Jonas, Eberneth, Mark, Cameron, Roger, Tordy, Marshall, Felix. Okay, appreciate the ones, chat. Appreciate the ones. What's good, H? What's good, Martin? So yeah, if we zoom out a little bit, okay, one thing that we've been doing was good, Mason. We as in the indices, okay, one thing that the indices have been doing is Friday to Monday's gap in the regular trading hours, large gap. Monday to Tuesdays, you know, Monday's closed, Tuesday's open, another large gap. And then Tuesday to Wednesday, today, large gap. We've been getting a lot of overnight movement this week. What's good, Big James? So, yes, the volatility continues. The ranges are relatively large. And you need to be aware of that. Okay? You need to be aware of that. Now, on a smaller time frame, okay, I want to say, yeah, we'll take a look at this first. So Monday's buy side, this wasn't a pre-market high. This was actually like a after hours Asia high. I mislabeled that. So 25,044 and a quarter. And that's what I was looking for this morning. Right? So 8:30 rolls around. And again, actually, before we get to that, we'll do overnight real quick. Okay. Leading up to equities, you guys see what we did overnight? Like, look at this, bro. higher retracement, higher retracement, higher retracement, higher retracement, higher, and then equities. So we had like 200, 300 points higher, okay, overnight. That huge gap open. This is like the halfway point here. So we open, right? There's our equities open, lower, retracement, lower, retracement, lower. And then we had traded higher. And I know it's kind of hard to see, but right there, and this was in the Discord as a thinner line because it is a smaller time frame. Was good, Oscar. But that makes a lot of sense right here. Okay. So it takes those very small time frame equal lows, rallies. This is a very, very short term mitigation. This is also the first presentation as well. This imbalance at 838, right? I know we traded around it for a little bit, but it's manipulation. Then we trade through it. Then it becomes bullish, mitigation here, rallied above the open, traded back down into the opening range gap, and then launched for the highs. So what I found to be interesting in here was how ES was drifting lower. I don't know what Dow was doing off the top of my head, but we left behind some very clean highs, which I like. Okay. So then we had traded lower. And if you zoom in on this, okay, you have an imbalance here. I'm including this gap right there, which was utilized here, was respected for quite a bit. Then we had traded through it right here. So retracement into the inversion, lower one more time. And that to me, right, is a short. I wish I did. I didn't short that, but okay, see that? So leaving those highs open, traded lower, back into the opening range gap, tapped the high end of it, lower, and then right here, like a minute or two later, that's when I was in the Discord saying, hey, wonder if, because one of you said something, you're like, oh, John, you're a market maker. I'm like, no, I just have experience. And I said, the first presentation isn't having it. And that's what sends us lower to the sell side from equities open, meaning the first 30 minutes. Right there. Then, okay, why do I think the market's heavy? Well, I mean, fuck, look at it. But the low here, okay, is just shy of 24,876.5, which is what we zoom over. Okay, that would be London's low. And yeah, Roger, at the open we did. Yes, we did. But you see that right there? Engineered low. Short-term low created to build stops. Anyone trying to long is going to have their stop, building also at London's low, right? So short-term liquidity, a little bit more longer-term liquidity from London. And obviously that has gotten attacked. Almost no retracement, and this thing is heavy. So look at that. Okay. Equities open initially went lower for short-term manipulation to then rally up, build liquidity, and then ripped ass all the way down here. So big ol' yikes. Big ol' yikes. What I found to be interesting as well, I will show you this. When we started trading in here, I went to investigate. I was like, what's going on up here? And when you go back, and yeah, Oscar, we definitely got Corvette candle. Well, we got Corvette candles lower. So for me, Corvette candles, I have a white car, so the up candles, but it's fine. Range wise though, yeah, it's a heavy market. But anyway, Friday the 3rd to the open of Monday the 6th. See that gap right there? We had traded around that a few times already. Immediately through that on the 10th, right, on FAFO Friday last week. And so today had traded up and into that. That's where that level comes from. Okay. So I traded right about halfway here, lower, traded into it one more time. And then, like I said in Discord, and like I said a minute ago, it sort of just drifted lower. But I think right in here somewhere, I was saying, hey, yeah, it would make sense if ES went for the equal lows and then keep NQ higher and then run it. But I was like, that's purely speculation. You know, it's like multiple moves in advance. Like it's just an idea. So we have to wait and see. And of course, right, the equal lows was not a reversal. We trade halfway. Again, in the regular trading hours gap, only to rally a little bit. But like I said, NQ had London's low still open. So this should not be a long and instead should be a short. See that? So, you know, however you look at the market, okay, is however you look at it. But there is no denying that premium and discount levels work. We opened higher, so we're already in a premium. Short-term low taken. I think Dow is higher here. Then we extend even further, so that old gap that was in the like short-term bullish, look at that. That's our high of day at 9:10. Okay, randomly at 9:10. So everybody agreed. Everybody agreed to sell at 9:10 perfectly. Right? I didn't even notice that earlier. 9:10. Funny how that works, huh? Funny how that works. Anyway, halfway, it actually I think goes to like the upper quarter, but respects the halfway point. Halfway here gives us a short-term rally, but again, everything I said already about NQ, this is a heavy market, so we stay in that premium here. This set of higher highs becomes like a mitigation to go lower. So you see what I'm saying? Again, however you look at the market, whatever way, it's undeniable. That's nice. That's nice. Shorts in here were nice. And then what I'm referring to is the upper half of our opening range gap, right? Every concept has a premium and discount. Our premium, even though we've already sold off, our premium was still good for what? Continuations. That's what I'm referring to. So it's the logic, right? The logic of buying low and selling high. Premium again, high time frame concept. Lower, still in a premium, lower. Okay. Remember, the market, even though it's sold off, okay, it can be technically cheap, but it can get cheaper. You get me? So now that we're below our opening range gap, we have taken out yesterday's PM session low. We traded into Monday to Tuesday's gap as well. Okay, NQ, very similar story. PM session low here, taken, and maybe whatever low that is. So we'll have to see. But does that make sense? Okay, why we may not be bullish up in here? Does that make sense, chat? Even though, right, like if we go back to electronic and we look at like a 1 hour, and yeah, we have very clean highs up here. We do. And I'm not denying that. But the markets go lower to go higher. They go higher to go lower. You get me? So yeah, it in the short term it was bullish, yes. But again, we had all of yesterday, a little bit of pullback there in the final hour. Then we had a bunch of overnight movement. So the market has built in a premium. So premium after multiple runs higher, premium end of the range, premium higher time frame concept. So logic is hard to argue against. It's hard to argue against. So as of today, do I think we're going to get all the way back up here? I don't think so. We could, but I don't know. I don't have too much expectation. So what questions do you guys have so far? Do you have any questions so far? Let's talk about, we can do both gold and silver. I'll do gold first, because I feel like people may have gotten confused. So I tweeted gold with the eyes emoji. So I didn't say short, I didn't say long, I didn't say upside, I didn't say downside. Roger, we may go into Sunday's gap. That is possible. That is possible, my friend. We had a very similar story for gold. The only thing that was rather janky about it was silver. But what I will tell you is this, right? Regular trading hours for gold, we had that short-term low here, general consolidation, small consolidation here as a accumulation, and then equal highs, consolidation. We had traded up into it and left it, and that's why I was tweeting about gold like right in here. So we do end up making a lower low. We had traded all the way back up. That short-term high here is taken, slammed lower, retracement, and then slammed for the lows. So that I thought was nice as a potential buy model, but being on the sell side of the curve. See that? That's what I'm saying right here. That regular trading hours low right there makes equal lows in electronic trading. Bam. Look at that, right at 10:51, right at 10:50, 10:51 again. There's that fucking time window, man. Everybody agreed to short at 10:50, right at 10:50. Everybody agreed to take it lower. That's crazy. That's crazy. I wish they would tell me when they all agreed. You know what I mean? So small reversal, retracement, and then this to me is janky, and for that we can thank silver. Because like I said in the Discord, when we were like right in here, okay, I said 51.10 as triple lows and 51.88 has buy side. So we started to head for the buy side. We don't get it. We had traded all the way lower for these short-term lows, we rally, and then now it's like selling off again. So this to me is horrendous. Horrendous. Yeah, I did, Felix, and it was that gold short, and that unfortunately that move higher had basically got me out break even. So yeah. But does that make sense though? Right? Silver having the triple lows, gold having the equal lows, but regular trading hours lows. And then we're going to leave this open for later. So in the short term, it was bearish. Like that was a good play. It's just this retracement higher had got me out. So, but it's not a surprise though. Like it's not shocking to me. And yes, Oscar, it is. I 100% believe that gold is the most manipulated asset, like more than anything else. So that's what I believe. You may disagree, you may agree. That is up to you. I don't know what that means, Jonas. But yeah, gold is pretty sassy, I'll tell you. I mean, all you really have to do is just look at short-term lows and short-term highs. Just like every day. Every single day, at the end of every day, just go over to gold and look at every short-term high and short-term low. And do that for like a month straight. And do it for the indices too. But after a month, whatever month you want, I'm willing to bet that you would come back and say, yeah, gold is insane. Okay, even today. I mean, look at it. Today's the 15th, right? We left some highs behind. All these lows taken. High here, low here, high here, taken. That low taken rather extensively. Leaving behind equal lows, we rallied up for all of these highs, left behind equal highs, traded lower, short-term high taken, short-term low rallied, and then that short-term low and the equal lows taken, and then those equal highs here taken, that low here taken. Like, bro, come on. It's insane. So it can be good. It can be a good thing. It can be a bad thing. It's probably a bad thing to use really, really tight stops on gold. But gold is really nice for shorting above old highs or buying below old lows. It's just hard to do. A lot of people struggle with that. Felix, I wanted to trade ES, and it really just did not give me something that I wanted here. Like, we took the low and we rallied up, and I'm like, okay, I'll long this right here. Like, if you could give me that mitigation, I'll long it. You know what I mean? That was just my thought process, and it never gave it to me. So once it takes off, well, I'm not buying that. So then you just got to wait. You know what I mean? You just got to wait. So, yeah. But to be fair, I personally thought we were more likely to have a bullish day than we were to have a bearish day. I didn't say anything in the Discord, but, you know, just to be transparent with you, I thought we were going to go higher. So, I'll say this. I'll bring up that question that that one individual had the other day, and they were saying, well, John, what do you do when the market doesn't do what you want it to do? And y'all remember my answer to that? It's like, we don't want the market to do anything. We have to go into this with the idea that we want to align with price, not the other way around. So, for example, like up in here, when I wanted to short that first time, not the second time, but like the first time, I was like, yeah, it's probably going to leave these open. But the problem that I had, honestly, is I didn't know what the target was going to be. I wasn't targeting the equities opening range low. I wasn't willing to target that. So I let that go. Okay. So, but had I, you know, done something, that would have been it. And I wouldn't have waited for like where we are right now. That would have been it right here. But I can be bullish, okay? But your bias can blind you to what the market's actually doing. The same way that emotions can do it too. And yeah, Mark, there's nothing wrong like trading something like this, right? First presentation or that first like mitigation here to go higher. There's nothing wrong with that. Okay. But once the market starts printing a consolidation, it starts printing a, you know, a slightly lower high, and then starts to trade lower, and, you know, bullish concepts become inversions. Okay, well, that's no longer a long. So that's going to be left open. There's a chance they could run that, sure. But the likelihood is downside. And then allow shorts, you know, open profit to get that liquidity built here. That's like, at least in the short term, right? How low are they going to take it? I don't always know that. But I know that as of right now, for sure, there's probably liquidity up here. It's probably here too. Because this big ass drop here, that's like our distinctive high. You know what I mean? So you can't just say, all right, I'm bullish no matter what. I'm bullish no matter what happens. Okay. Well, you can be bullish, but if the market's going to be bearish, you're done. You're done. So should we target the lowest low or the highest high when looking for a TP? So, Oscar, that depends. Part of that depends on time. And part of that also depends on, you know, like the framework. Like, for example, if I was wanting to long here, okay, I think obviously the easiest target, if it is bullish, is going to be the next high, which after this move lower is going to be that one. That right there. Okay. And I'm going to dim that one so it's not as, you know, in confusing with the levels here. That to me is where a lot of the trailing stops are at the moment. So again, if it is bullish, yeah, the easiest target should be that. The next one would probably be like something like this. All of these are consecutively lower, so it really has no reason to stop there to go lower. It could, but the next one would be that. You see what I'm saying? Sure. If you wanted to like long down here, or like say a propulsion in there, or, you know, I mean, there could be other stuff in here. I really haven't looked while I've been talking to you. you can target an imbalance. That'd be easy. But like high wise or low wise, that. So remember, you remember that image I gave you guys the other day, right? How we have multiple opportunities going lower, and then we're going to have multiple opportunities going higher. So imagine if you were short for a second, you know, where would your stop be? You probably take your stop, move it lower. When the market makes another low, you probably move it lower. Market, you know, trades below, like all the way down here, you probably drag it lower. Most people do that. There's nothing wrong about that per se. You are locking in profit. There's no issue there. Right? So when you think about that, okay, the last distinctive high is going to have a lot of liquidity there. You may not be short. That doesn't mean other people aren't short. There's a lot of us out here. You know what I mean? So there's going to be a build up somewhere. So that's the first one. That's another one. This up here to me is terminus though. But yeah, if you just want to like long the inversion model and get out at that high, and that could be enough. I don't know how many points that is, like 70, I think. Oh, I lied. 150. That really is 150 points. Okay. There you go. Lunch macro. Are you talking about this one or the one prior? This one in here. This one didn't do a lot to me. That didn't do a whole lot. Right, Jordan. Right here. Yeah, that's this one. I thought I had streamed. I thought I had started the stream already, like at 11:57 or 58. I usually try to do that because I had that alert there for London's low. And then it was like, da-na-na. And then I looked at OBS and I hadn't started it yet. I was like, oh shit, I guess I'll start it now. So, but otherwise, yeah, that was pretty solid. So I was kind of being facetious earlier, saying that everybody agreed at 12 o'clock to short. We all shook hands and agreed 12 o'clock's is short. The entire market, everybody in the US and everybody outside the US all agreed at the same time to short. So again, to me, it's algorithmic principles. It's algorithmic, right? Like, how can you deny that? When you look at the bodies, right? Even on like a closing basis, look at where the bodies are. The bodies here are inside the basically like the last imbalance higher, right? Stopping there, stopping here and turning. And then as soon as that's no longer the case, the bodies are inside of it. Bodies are inside of it to go lower. Like that, to me, that's just algorithmic. It's just beautiful. It's like, it's just undeniable. You know what I mean? It's the same shit here. Right here. Okay, look at that. Manipulation below first presentation, and then all of a sudden the first presentation becomes respected to go lower. Up candle here, respected to go lower. MOC, lower, up candle, lower. Or sorry, not MOC. I'm fucking tired, chat. 12 o'clock macro. You know, today was one of those days I got up early and couldn't go back to sleep. So I'm like, it's 12:40 in real time, but it feels like it's like 5:40 p.m. for me. So I'm like groggy as shit right now. But I mean, that, like, look at that. That's like, bro, That's beautiful, right? Just look at it. Would you look at it? Would you look at it? Look at that. Look at that. Look at the bodies right there. The close and the open, both respecting the halfway point of the first presentation. Bro. Like, I don't even have anything to say. I'm going to just leave it at that. Just look at your charts. That's all I'm going to say. Just look at your charts. Look at the time windows. Look at the concepts. Look at the logic. It's just too chef's kiss. Know what I'm saying? Welcome one. Shifting price delivery, you could have said, yeah, let me take my profits if I longed this morning. Yes, basically. The lunchtime sell-off was absolute filth. Oh, yes, I agree. Mark Douglas talks about an exercise about taking the next 20 trades of your edge and trade them flawlessly or enter them flawlessly. Now the question is, when the max weekly win target hits, do I take the next trade off my edge in the week 2 or don't? I would just switch either to a live account or switch to a demo account or a paper account or just throw up a fucking RR tool. If the purpose is for studying the next 20 trades, then do that. Then do that, big fella. So we are at 12:44, so not quite another 15-minute candle just yet. Not quite there just yet. But if you were holding shorts, where would your stop loss be? If you were trailing it, where would it be? Based on NQ. I mean, ES is probably going to have a similar story. $27.50. Oh, nice. Very good. That is the discount end of the opening range gap, Cameron. Oscar said previous high. Okay, here's 12:45. Here's that new 15-minute candle. So how would you feel if your stop was right there at 857, 858 if you round it up? Boop. Random. Random, random, random. You have this imbalance here too. And then halfway as well. But see that? You see how it just spikes like that? It just spikes like that. Right. That's the algorithm repricing expeditiously. That's why it's algorithm. You're literally watching the algorithm. That's what we're doing here. You're literally watching the algorithm. With the logic. We talked about that. You asked about what highs do we target? And I'm telling you, well, shit. If you're trying to long, it'd be after a big ass sell-off, it'd be the next obvious one. That's it right there. And we just so happen to magically, what is it called? Like a magnet, just bloop, right up there. That's how that works, man. Where are the stops? That's what we go for. That's not hard. That's not hard at all. Hourly candle turns green at 24,900. Oh, is that like up here? Yeah. Well, okay, let me zoom out a little bit. I've been watching a 1 minute like all day. All day. If it was me, and it's not, but if it was, it would make sense depending on what we do here. Okay, because again, I don't know, but if it was me, I would rip it, take it back into this as like a mitigation play, reaccumulation play, and pop it above that 25, like 115 and above. That's what I would do if I was in control of this market. Your TP would have been 24,860 if you were in that. So if I'm in on multiple contracts, that is at a minimum a partial. If I had 2 more contracts, like probably not of NQ, but like say MNQ, then like I said earlier, I would target that one, this one right here, and then terminus would be this one up here. So if you're long, right, first available high has been given. When the market gives, you want to take. Okay. So if it does happen to be a buy model and we do happen to run this, then that's probably what's going to happen. It would be make a new high, that would be a partial, and then trade back into like, ooh, that 15-minute looks like shit. These up candles here as a reaccumulation. You could add one to go for that up here. But these are premium pools of liquidity, if that makes sense. This is just the lowest one, right? Like, let's do this. If we took everything off, what do I have locked besides price? I'm just kidding. All right. When we talk about partials, right? When we talk about these highs in here, that's one, and the one that we mentioned earlier, this right here. Okay. When you look at this range from that to the low, this is a premium. This is a premium. This one here is a discount. You see what I'm saying? So that's why I said that's the easiest one. Think about it. Logically, it can't get to this. It can't get to this one without first getting that. It can't, let's say, get up here unless it gets to that first. You see what I'm saying? Like, it has to hit all of these in order. It can't not do that. But like I said, at the same time, I could be wrong. If this remains heavy, we could just trade back into the range and then fiddle fart around. You know what I mean? Or we could just continue lower. That could be a thing too. And this is why partials pay. So if you're in from down here or close to it, and that's a partial, I would be break even after a partial. And then that's what I would be holding for next. That one here and those up there. Okay. So don't come crying to me if the market comes all the way back down here and wherever your entry is at, you get out break even. Don't come crying to me. Just because I might be having a bias that's way up there, we might not get that. As you can tell, I'm not perfect. I don't always call like super big ass moves every single day. If you're in one, am I still here? Am I? Drop some twos in the chat if I'm still here. Can y'all hear me? Yeah, no. That was me, Chad. That wasn't on you. I know. I looked at my OBS. It was on my end. Fiber optics. Like, almost the best shit you can have, and it's still fucking up, man. That's crazy. Okay. What were we talking about? If there's only one contract, right? Like, okay, do you, drag your stop higher, or do you, aim for the higher ones? Look, honestly, that depends. But I'll tell you, the majority of the time, if I'm in NQ specifically, I probably will. So I don't know if it's lagging for you guys or not, but it says I'm good here. I don't know what's going on. You start fucking printing candles, and that's when the internet starts getting crazy on you, man. What the fuck? What type of shit is that, man? Can we drop some threes if you guys can still see in here? Because I'm starting to get fucking annoyed. I was already tired to begin with, chat. Now the fucking internet. You know what I mean? I'm about to play "Hold Me Back" by Rick Ross. You know what I mean? I'm about to turn it up. Can't hold me back. Jeez. We got a couple threes. All right, I guess that's good enough. Out of however many members we have. Okay. But yeah, that's really about it for today. I mean, I don't have anything else for you. The same idea for ES. I know there's a lot of markups here, but the sell-off here, okay, this isn't really all that distinctive, but that's the same one from NQ. Right there. Right, so that would have been the first available target. And this, to me, has already really been... Like, this imbalance has been traded into. This one lower has been traded into. So to me, and we've worked this level here. Like, if you just look at this consolidation here, we've worked it. Not we've, but like price-wise, right? We got buy side, sell side, delivery, basically on both sides of the market. So I guess the thought process is there anything in that would take us lower? Like, do we have a reason to short that to go lower? And I don't see a reason to. You know what I mean? So if it's going to just, smoothly run for trailing stops, it's going to be that high, just like NQ. Right? Imbalances have been, traded into. We got, to me, efficient delivery. It has no reason to trade to anything in here and go lower. So it's probably going to seek liquidity. That's, probability is what I think. Make sense? And that's all there is to it, man. It doesn't have to be overcomplicated. Some people think I'm complicated. There's nothing complicated about that. Where are the trailing stops? We can trade for that. If we're wrong, then we're wrong. Then we take the stop out, try to figure out what happened, what we missed, and move on. So yeah, we'll see how far this can retrace lower and see if it wants to trade higher. But I'll give you guys like I'll give you guys like 2 minutes to ask any questions that you might have. Because we do not stream on Thursdays. We won't have a stream tomorrow. I'll put out a market review tomorrow. But we do not stream here again until Friday. So ask now. Or hold your peace for the next 48 hours. 47 hours, I guess it would be. But what do you guys think? You guys think we're going to trade lower? Or do you think we're going to run for another high? What's it going to be, chat? What is it going to be? All right. Well, if there is no more questions, or if there are no more questions, English, then that's going to be it. 24,992.25. I have an alert set there, and I have another alert set at 25,115. 120 if you want to round up. That would be the next 20 level. But yeah. Never force price. I feel like all the chat's coming in at once now. What the fuck's going on? See liquidity. Yeah, may not be a straight line, but yeah. So, all right, y'all be good. Be blessed. I will see you on Friday.